We're joined by a very special guest, Deborah Kearns, a freelance editor and writer with more than 15 years of experience in real estate mortgages and personal finance. We discuss the growing insurance crisis affecting homeowners nationwide, with Deborah sharing key data on how rising costs and regulatory changes impact home affordability and mortgage approvals.
In my research, I found that the average annual homeowners insurance rate jumped to 2,377 in 2023, and that's up nearly 20% from 2021. If you're building new construction, working with borrowers who are building new construction, that you have to take into account and figure out, okay, what is that going to do for the payment later on when we do convert to that second, loan that you have to requalify for all the way from scratch? Is that going to push you out of contention to qualify on DTI?
I'd like to welcome everybody to the Construction Lending Podcast. I'm your host, Sean Ferris, and we got a great guest today, Deborah Kearns. She is a freelance editor and writer with more than 15 years experience covering real estate mortgages, and personal finance topics. She previously led enterprise-wide communications for Finance of America. Her work has appeared in the New York Times, Forbes Advisor, the Associated Press, Market Watch, USA Today, MSN, and the Huffington Post, among others. Now, Deborah, thank you for being on the podcast today. Really appreciate you joining us. I know you got a busy schedule.
Thank you for having me.
I'm going to jump right in. And one of the reasons that we connected here was about an article that you wrote, something really that caught our eye, that we think is an important topic for a lot of our listeners here. But it was around the kind of an insurance crisis and rising insurance costs that many homeowners across the nation are being impacted by. Impacting affordability and people just having insurance in general, and what's going on in the market there. Absolutely fascinating. I encourage our listeners to read the article. But what is happening there? How are these rising insurance costs affecting homeowners, and why should people be concerned?
Absolutely. So this was an article I did for Riz Media, which is a trade publication in the housing industry. And in my research, I found that the average annual homeowners insurance rate jumped to 2,377 in 2023, and that's up nearly 20% from 2021. So, and that data comes from Insurify, which is an online marketplace for insurance comparisons. And then I think for this year, there was a 6% projected increase in rates, so getting us to about an average of 2,522 by the end of this year. Now, of course, these projections were probably before Hurricane Helene and Milton just hit Florida and, the Southeast, particularly North Carolina. So what we're seeing is homeowners insurance rates are soaring, especially in those coastal areas. If you look out west, I live here in Colorado. We tend to get wildfires and pretty bad hailstorms. Certainly California and Pacific Northwest sees its fair share of wildfires as well. And what you're seeing is, as a result of rising premiums and the rising costs to pay out these claims, because the replacement value costs have gone up significantly, what you're seeing is some insurers stop writing policies altogether, pulling out of markets. And so it's forcing homeowners who don't have any other options to go to the FAIR plans, right, which are usually the options of last resort for homeowners insurance in those states. So it is creating this gap in coverage. People are either foregoing the insurance, they're underinsured. So when a crisis like that hits, or a severe weather event, you're either underinsured and you're going to have challenges building again and making those repairs, or you don't have coverage at all if it's just so expensive that you're opting to forego it altogether. And the interesting thing about that is, a lot of mortgages, you can't get approval for a home loan unless you have that homeowner's insurance in place, right? So that is creating a big challenge for homeowners and potential homebuyers right now. Just when they're finding that the taxes and insurance portion of their pity payment, right, is exceeding in some cases the principal and interest portion. So that's something that the housing industry is watching very closely right now. It's becoming a major issue.
Well, how significant is this? I live in California. The wildfires, and we had insurers pull out and rising.
Right.
How significant is this as a nationwide problem that we're looking at?
Right. So I think what's interesting to note is that insured losses from natural catastrophes have grown in frequency and intensity. So that in the research I did, that's what we've been finding. So from 2017 to 2023, the U.S. saw 137 separate billion-dollar disasters. I mean, we're talking fairly massive loss of life, killing over 5,500 people, but also causing more than a trillion in damages, and that's according to the NOAA, right? And in 2023 alone, so just last year alone,
Mm.
28 weather and climate disasters causing $92.9 billion in damages. And that was the most ever. And that, again, was before this year and what we just saw from those two major hurricanes of the Southeast. So, in speaking with different experts in the insurance realm, in real estate mortgages, what this is doing is really forcing folks to reevaluate. Okay, first of all, can I afford the insurance and get the insurance in the places I was interested? So Florida is a prime example where not only do you have the homeowners insurance issue, but you also have for those condos, right, that are on the water. Um, they had that major collapse of a condo building a few years ago down in South Florida, and that triggered new legislation in terms of condo associations having enough money in their reserves. They have to be fully funded, so now condo association fees are going up as well. And so you're just finding all over the board, it's forcing maybe the natives, people who are from Florida or live there, are probably going to have to start reevaluating where they live, maybe moving more inland away from those expensive areas. And then um, the real estate agents I talked to down in South Florida said, a lot of our clients are wealthy folks who are coming from the Northeast where they can afford to buy a lot of these properties in cash. So they take the risk of just foregoing the insurance because they have the money to pick up and go elsewhere if there is a loss, or make those repairs outright. So they're kind of rolling the dice and taking that risk. But that doesn't really help the folks who need affordable housing and are trying to, they want to live in paradise, but paradise comes with a cost, especially in a state like Florida or California, or even you think about coastal Texas and Louisiana, New Orleans. I mean, a lot of these places are just seeing a lot of difficulty with getting insurance coverage to begin with, but also affordable coverage, and that's really what's creating a huge affordability, compounding that affordability crisis we're already seeing with the rising home prices, mortgage rates staying elevated.
Now, how should I think about this? When I'm contemplating insurance, is this a hey, the changes that are happening in Florida only affect Florida, or the wildfires in California only affect insurance in California, or is this, is it crossing state lines? Are rates going
Mhm.
up in areas that are not prone to this because of what's happening in California and Florida, or do these tend to be
Mhm.
like more local state issues?
Right. I think you're seeing it fairly across the board, obviously, in areas that have more frequent natural disasters. It's going to be more pronounced. Like the rate increases are going to be much higher because they're having more claims filed in those places. So it makes sense that those insurance companies would charge more specifically in those places. But I think we're seeing it across the board. The other very important thing to note is most standard homeowners insurance policies do not cover damage and loss from flooding. You need a separate flood insurance policy generally to cover those damages. So, usually you go through the National Flood Insurance Program for that, right? Through FEMA. That's not something that, unfortunately, is covered in a standard policy. And a lot of people don't seem to understand or know that. They're not educated in knowing that. And so they're surprised if they have damage from flooding. For example, let's take Helene that just devastated North Carolina. They were not expecting that. They were not prepared for that level of destruction, and a lot of it was from flooding. So I imagine if they didn't have flood insurance in place, a lot of those claims could get denied just because that's considered the water damage, right? So I think it just creates a continued affordability gap, and we are seeing that nationally that the rates are going up on average, but particularly it's much more pronounced in a few of those states I mentioned. Those coastal southeastern states, California, Pacific Northwest. But think about the middle of the country, Tornado Alley, right? You've got a lot of those states that that also get wind damage from severe tornadoes, and we're seeing the frequency and the level of destruction from those increase as well. And the researchers, the scientists are saying that we're going to have, it's not if, it's when we're going to have more of these severe weather events, and there's going to be more, the destruction is going to be more intense than we've seen in the past.
So the frequency of events and the payouts and the cost of that is all rising. And
Right.
the kind of outlook is, hey, the experts say we're going to see more of this, so it's just going to get worse. How much
Correct.
you know how much of these rising costs and availability of insurance has also contributed to other things, rising costs due to inflation. I know in California the regulatory environment for insurance carriers having to cover more losses caused some to pull
Mhm.
out. You mentioned that in Florida, changes to the way homeowners associations have to insure it and rising costs due to that. Those
Yeah.
types of regulations or changes in the law. How should we think about all of these things moving, really in the wrong direction for homeowners? Are they all contributing to it, or hey, the big chunk of this that we need to watch out for is, climate related issues?
Right. I mean, I think it's across the board, right? Home affordability is a challenge. Period. Right. We're seeing, home prices have shot up way up. Mortgage rates have stayed elevated. We're not going back to the era of 2 to 3%, even maybe 4% mortgage rates. That's not coming back. So we have to adjust, and I think the market has adjusted. It's going to be higher for longer. But what this increase across the board in insurance costs, homeowners association, or more specifically condo fees, is doing in these specific areas is that it's completely pricing and sidelining people, just pricing them out of homeownership altogether, or it's making them have to turn to perhaps riskier loan products, right? Maybe products like non-QM that tend to have a little higher interest rates, if they can't get a conventional or government-backed mortgage because of the insurance issue, right? So I think we're starting to see that. I talked to a mortgage lender here in Colorado who mentioned she's seeing that deals are just not closing because the other big issue that we don't talk about in the mainstream is that when that homeowner's insurance rate comes in and the lender plugs that in to your DTI calculation, your debt to ratio,
Yeah,
right?
and
Yeah, but that debt to income ratio, right, which is key to getting qualified for a mortgage. So that is now, because of the insurance piece or the condos association, right? That's coming up, and that's
mm,
creating. I mean, if you exceed that DTI ratio, you're likely going to have a hard time getting approved for a mortgage. So that's what the lenders say they're seeing, is that it's pricing a lot of people out. They can't afford the mortgage payment once you take the homeowner's insurance estimate into consideration in that calculation.
that's where I was going to go with my next question. I'm thinking about advice that you could give real estate professionals or people out there looking for a home. They're plugging, they're doing their own estimating. They're using online calculators.
Right.
Some of those are just suggesting a percentage of the overall purchase price for the insurance and calculating out, hey, this is what you could probably afford. But then they actually get to the, underwriting phase of this or the and they're plugging in real numbers. How big of a
Right.
shock are people experiencing? Like, is this $100 change in their monthly payment that they're going, oh, well, that's minuscule, we could still make it work? Or is it, hey,
Right.
debt to income ratios being completely throw off and the payments going up $500? Like, how big of a
Yeah.
change should people expect?
I mean, that is the case in some of these specific states. They are seeing a massive bump in their DTI ratio as a result, and the payment going up several $100s because the insurance piece of it, the condo association dues, especially down there in South Florida. I mean, that's what's driving that up, and it's pricing some folks out. So I think the advice I would share, that was shared with me when I wrote the article, specific to real estate agents, is you really need to help your clients do their due diligence. So be researching, for example, the condo association minutes, the bylaws, all of that, to make sure that they have the right cash reserves in place, that they're prepared if there is a massive storm or something happens where there's a significant damage. What do their financials look like? Are they going to have to levy a bunch of special assessments against homeowners in that building, and then you're paying out of pocket for that, right? So that's one big thing I would say that real estate agents could help their clients really pay attention to, is the HOA or condo association financials and their meeting minutes. So if you dig into those meeting minutes, are there a lot of discussions about the association not taking care of certain maintenance issues or repairs or things like that. So really paying attention to that paperwork that you can get, you have to request it, but or dig into public records for it. And I think the other big thing is just making sure that you're shopping around on your insurance. Some people just, they'll either go to those marketplaces and plug a few things and then trust that, or they're, maybe they've been with a carrier for years and years, and they don't like the idea of a change. But you absolutely, like you shop for your mortgage lender, you absolutely have to shop around for your insurance carrier as well. And also know if you're in a flood zone, right? So if you are in a flood zone or an area that's prone to it, but may not be in a official FEMA flood zone, you need to look into flood insurance. You're required in certain places to have it, right, if you are in a flood zone, but you really need to understand what that means, and really pay attention to what your insurance inclusions are. And 9 times out of 10, I mean, 10 times out of 10, I would say flooding is definitely not included in it. So people really need to read that fine print, and agents can help them better understand that, as well as the mortgage lenders can really help them bridge that, I think, that gap in education of understanding what your insurance does and does not cover.
No, I think that's great advice. Now, I'm going to shift the conversation a little bit more over
Mhm.
to kind of our audience interest when it comes to
Mhm.
construction lending. And, consumer construction loans is going to be what we call the two-time close or the one-time close, right?
Mhm.
So one-time
Mhm.
close is going to modify in a year or convert in a year to permanent financing. And a two-time close is, hey, they're going to go have to completely requalify a year later, and get some sort of permanent financing, right?
Mhm.
So as we think about the rated and change, especially for homeowners insurance, what kind of change have people been experiencing year over year? If you had to, even is it a 5% change, 10% change, 100% change? Like what, as you start a construction project, we have to think of, hey, this is going to go up 10% by the time they get to their permanent financing. Is it going to go up
Right.
50% at the end of 2025? What should we plan for?
Gotcha. And just to clarify, you mean in terms of the rate increase in insurance, correct? Like
Yes.
annually? Yeah. So, I mean, again depends on where you live, but as we mentioned earlier, we saw a 20% increase from 2021 to 2023. I think that was 23 alone, right? And then this year, I think it slowed a little bit this year. They said 6%. Now, of course, that was before those two big hurricanes just hit. So, in those specific areas, you're probably going to see a much higher increase. It was interesting, the other data I pulled showed that Florida, they on average are shelling out nearly 11,000 per year on homeowners insurance premiums. That was as of last year, according to Insurify, and this year was expected to jump 7%. Up to 11,759. And Louisiana wasn't far behind. They had a projected hike of 23% this year from last year, and that's going from about 6,300 to 7,800 just in the space of a year.
Wow.
So there are some in certain states, there are going to be bigger jumps than others based on what they're seeing in terms of their severe weather events. So that is something you want to if you're building new construction, working with borrowers who are building new construction, that you have to take into account, and figure out, okay, what is that going to do for the payment later on, when we do convert to that second uh, loan that you have to go requalify for all the way from scratch. Is that going to push you out of contention to qualify on DTI?
Yeah, and I think on the two-time close, that's where I would try to get my strategy and planning in line. Is, hey,
Mm.
12 months from now, we're going to have to go get a quote, and they're going to have to, not necessarily requalify, but qualify for permanent financing
Mhm.
versus the one-time close sounds better and better because they're getting qualified today. Their loans based on the insurance rates that are today.
Right.
Pricing that in, it will go up, but they're not going to have to go requalify that insurance component. I'd say on most one-time close products, but it's really important that that we pay attention to these things, and because they could impact your portfolio or your construction loan, or just living in that place in general.
Right. Well, and I think also on, for your audience specifically, I think what it's going to do too. I mean, we know that the cost of building has gone up, right? The labor, the materials. So it stands to reason that's also impacting contractors when they go to repair and replace properties that have been damaged in storms. So looking at both sides of that, you have costs, due to inflation, just due since COVID, the rising cost of everything, the building materials as well as the labor. We are seeing that impact renovations, repairs when people experience a catastrophic weather event. So that's one thing that the insurance folks I interviewed really made clear, was that we are seeing that cost skyrocket. And so that's pushed the price of, claims or the amount that people are claiming per loss, per damage, has gone up exponentially because of all those increases we've seen since COVID.
Oh, wow. No, that's amazing. Anything else that you like? I mean, it's just such a great topic that, that I think most professionals out there need to understand, plan for, have on their radar. Anything else that you'd like to add to, to top this off and make sure that they know everything they can about the subject?
For sure. So I would say the big thing is, the idea of people going uninsured is very scary. And in researching for this article, I think they found 1 in 13 homeowners in the U.S. are uninsured, and that's about 7.3% of all U.S. homeowners, and that's 6.1 million homes. So that's, Consumer Federation of America did an analysis of census data, and so that's what they came up with. And I think what's interesting is that more often than not impacts communities of color, households with lower incomes. And so those are the folks that feel the most pain when, we have a catastrophic weather event, and they're either underinsured or uninsured completely. So they are the ones that disproportionately feel the impact of this. So just something to note, that you really should seek out the support and assistance of your lender, your real estate agent, but definitely shop around and don't forego insurance if you can, because you could be in a position where you won't be able to rebuild or repair your home if you don't have that coverage in place and something happens.
Yeah, what a horrible position to be in, to just go through a disaster like that, lose everything, follow it up with, I don't have insurance and it's never coming back.
Right.
That'd be pretty tough. Thank you so much for being on the podcast. This is absolutely fantastic. We're going to include a link to the article that you wrote. I found that completely fascinating. I want to make sure our audience has access to that. What's the best way, if somebody wants to learn more or reach out and get in contact with you, what's the best way for them to get in touch with you?
Well, my website, deborahkearns.com. You can look me up on LinkedIn. Always happy to talk shop. But deborahkearns.com, DeborahKearns.com.
And we'll include that with the podcast. But Deborah, thank you so much for being on the podcast today. It was absolutely fantastic. And I know myself, I learned a lot, and I'm sure our listeners will as well. But thank you.
Thank you for having me.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.